let's pose that question to Abneesh Roy, who tracks the sector very closely. Abneesh, your thoughts? And what are the stocks where you're still bullish on, despite the kind of sort of volatility or pressure that we've seen in the recent quarters? Where do you think there is potential for maximum growth now?
Sure, thanks and good morning. So definitely FY24, we are seeing investor interest definitely improve because of 3-4 reasons. One, of course, is this time there will be 6% higher rainfall than normal. Last year, it was 6% lower than the rainfall. So clearly, the rural slowdown, which has been there now almost for 1.5 years, we expect that from Q2, that should reverse. Local player competition has been there in FMCG in few categories that will anniversarize in Q1. So again, from Q2, that recovery will start to happen, and that will benefit HUL, Britannia, Dabur, Marico, etc. Third, of course, we will see that definitely pricing growth was negative for most companies in FY24. We will see because of the inflation in the salary cost and media inflation and crude also going up. We see that price hike of 2 to 3% will come back. In Q4, a lot of the results will be mid-tier or a bit weakish. So definitely HUL, ITC, Bajaj, etc. results will be weak. But we expect United Breweries, Tata Consumer, Colgate, Godrej Consumer, and Pidilite to be strong. And rest of the companies will be in between. From a stock perspective, I think where is the valuation comfort? Where is FY24 likely to be delta because of the reasons which I mentioned? I think Britannia, Dabur, Marico, etc. haven't really gone anywhere, as Mangalam also highlighted over the last 2 years, even Hindustan Unilever. But I think in Unilever, there is the problem of higher royalty and the GSK sales going away. So I would say that Britannia, Dabur, Marico, etc. valuation comfort and the drivers for growth are better. Yes.
Abneesh, do you have coverage on Senco?
So in jewelry, clearly the updates are really good. We have coverage on Titan, but clearly we are seeing that the rest of the players like Kalyan and Senco are also definitely copying the template and doing quite well, growing much faster than Titan because of the smaller base. So I will expect that gold as an asset class and organized jewelry will keep taking market share because still 70% of the industry is with the unorganized players, local players. So yes, I would expect Titan and rest of the listed players should also do well in FY25 because of the gold pricing, that confidence, plus definitely market share gains also continue.
Okay, all right. Hi, Abneesh. Good to see you on the show. What about Nestle? Any view out there from the FMCG pack? Nestle actually has been a relative outperformer in the last 1 year or so. Your view?
So Nestle has done well last few quarters in terms of volume growth and pricing benefiting for them. Going ahead, what we see is definitely cocoa and coffee cost as a raw material is on the higher side for them. And we will see that next 5 years, the royalty cost will go up by 15 bips every year. So currently, our pecking order in terms of good results currently and companies growing faster, we will have United Breweries, Tata Consumer, Godrej Consumer, and Pidilite. Nestle will be lower in terms of pecking order because of the inflation risk and because of the royalty cost increasing also.
Okay. Any other stocks that you track closely where you are expecting positive, earnings this season?
I think clearly Avenue Supermart, definitely the update was clearly positive. The store expansion has sharply picked up, which we were highlighting, we were expecting. And definitely in terms of the sales growth and same store comparables, also there is an improvement. We expect improvement in the margins also. So Avenue Supermart, clearly the improvement will continue. Same will happen for Nykaa also. Nykaa also, I think clearly the update was decent and last 2 quarters back to back has been good and stock has not really reacted too much to the good performance. My sense is we will see rational behavior of the D2C and that's why we will see Nykaa growing faster than Honasa Consumer this quarter. That's our expectation. So that's also one more company in the discretionary space we should do well.
Okay. Abneesh, we'll leave it there for now, but would love to have you back once we start getting results for analysis. Thank you very much for joining us there. Let's talk about the